Welcome back to XRP Spotlight, everyone. I hope you're having an amazing day wherever you're watching from. Today we have a fascinating story that combines XRP, institutional money, market volatility, and one of the most talked about companies in the world, SpaceX. Before we begin, it's important to separate confirmed facts from speculation because that's exactly what we do here on XRP Spotlight. We focus on real developments, real market data, and the bigger picture that many investors miss while they are focused only on short-term price action. The crypto market has experienced significant volatility recently. XRP has been under pressure along with Bitcoin and Ethereum, and investors everywhere are asking the same question. Are we looking at a temporary correction, or is something much bigger developing beneath the surface? That's exactly what we're going to discuss today, because there are several important trends unfolding at the same time, and when you connect the dots, the picture becomes extremely interesting. Over the last several weeks, crypto markets have experienced increasing uncertainty. Bitcoin has faced heavy selling pressure, Ethereum has struggled to maintain momentum, and XRP has moved alongside the broader market, despite several positive developments surrounding Ripple's ecosystem. Whenever markets enter periods like this, emotions tend to take over. Fear rises quickly, investors begin questioning their positions, and social media becomes filled with predictions of both total collapse and immediate recovery. The reality usually sits somewhere in between. Successful investors understand that corrections are a normal part of every market cycle. Volatility creates discomfort, but it also creates opportunities. While many traders focus on daily price swings, long-term investors often spend these periods studying adoption trends, infrastructure growth, regulation, and institutional activity because those factors frequently matter more over time than a few weeks of market turbulence. One of the biggest stories affecting crypto right now is the relationship between digital assets and traditional financial markets. Years ago, cryptocurrencies often moved independently from stocks. Today, that relationship has changed dramatically. Institutional participation has increased, regulated products have expanded, and large investment firms now treat digital assets as part of broader portfolio strategies. As a result, when major stock indexes experience volatility, crypto often reacts as well. Investors are watching inflation data, interest rates, employment reports, and global economic developments more closely than ever before. That means XRP holders are no longer just tracking crypto headlines. They're also monitoring broader financial conditions because those conditions increasingly influence capital flows throughout the entire digital asset market. At the same time, XRP remains one of the most closely watched assets in the crypto industry because of Ripple's continued focus on real-world financial infrastructure. While many projects concentrate primarily on speculation, Ripple continues discussing payments, cross-border settlements, tokenization, liquidity solutions, and enterprise adoption. Whether someone is bullish or bearish on XRP, it's difficult to ignore the fact that Ripple remains deeply engaged with regulators, financial institutions, and payment providers around the world. Those efforts don't always create immediate price movements, but they contribute to the long-term narrative that many investors continue following closely. Infrastructure development tends to happen gradually, often attracting little attention until years later when its impact becomes much more visible. Now let's talk about SpaceX, because this is where many headlines have created confusion. There has been enormous public interest surrounding SpaceX due to its success in aerospace, satellite communications, and innovation. However, as of today, SpaceX remains a privately held company and has not officially announced a public IPO. That distinction is extremely important because rumors often spread faster than facts. Investors should always verify information before making financial decisions. Even so, discussions surrounding SpaceX continue generating attention because the company represents one of the most influential private businesses in the world. Whenever a company of that scale appears in financial conversations, markets naturally pay attention, and speculation about future opportunities often follows. The reason some investors connect SpaceX discussions with crypto markets isn't because there is a direct relationship between XRP and SpaceX. Instead, both represent broader themes involving technological innovation, financial transformation, and future infrastructure. SpaceX is helping reshape access to space and global communications through Starlink. Blockchain technology aims to modernize certain aspects of finance and digital transactions. These industries are different, but both attract investors who are interested in long-term disruptive technologies. That's one reason why conversations about innovation frequently overlap across investment communities. People looking toward the future often examine multiple sectors simultaneously rather than focusing on a single asset class. Meanwhile, XRP investors continue monitoring several developments that could influence adoption. Regulatory clarity remains one of the most important topics in the industry. Many institutions have expressed interest in digital assets, but they often require clear legal frameworks before expanding participation. That's why legislation, regulatory guidance, and compliance standards continue receiving so much attention. Markets may react strongly to these developments because regulatory certainty often reduces barriers for institutional involvement. While no single announcement guarantees a specific outcome, the overall direction of regulation remains one of the most closely watched factors across the entire crypto industry. Another trend worth discussing involves market psychology. Historically, some of the strongest opportunities have appeared when sentiment was at its weakest. During major rallies, everyone wants exposure. During corrections, enthusiasm disappears. Search interest declines, trading activity slows, and many casual participants leave the market entirely. We've seen this pattern repeatedly across financial history. That doesn't mean every correction immediately leads to a recovery, but it does demonstrate how emotions often influence investment decisions. Experienced investors understand that market sentiment frequently swings from extreme optimism to extreme pessimism and back again over time. From a technical perspective, many analysts are paying attention to oversold conditions across several major cryptocurrencies. Technical indicators are not guarantees, but they can provide insight into market behavior. When selling pressure becomes unusually intense, markets sometimes reach levels where traders begin searching for value opportunities. That doesn't automatically signal an immediate reversal, but it does attract attention from participants looking for potential turning points. XRP, Bitcoin, and Ethereum have all experienced periods where technical indicators suggested elevated levels of selling pressure. Investors are watching closely to see whether buyers begin returning in greater numbers during the coming weeks. Institutional adoption also remains a major theme. Over the past few years, digital assets have moved significantly closer to mainstream finance. Exchange-traded products, custody solutions, regulated trading venues, and blockchain-based financial infrastructure have expanded substantially. This evolution doesn't happen overnight, and progress is rarely linear. However, the overall trend shows increasing interaction between traditional finance and digital assets. For XRP supporters, this matters because Ripple's strategy has long emphasized institutional utility and financial integration rather than purely retail-driven speculation. One of the most important lessons investors can learn is the difference between price action and fundamental development. Prices can rise or fall dramatically over short periods due to sentiment, liquidity, and macroeconomic events. Fundamental developments often unfold more slowly. A partnership announcement, regulatory milestone, infrastructure upgrade, or adoption initiative may take years to demonstrate its full impact. That's why many long-term investors spend as much time studying underlying developments as they do watching price charts. The most significant changes often occur quietly before eventually becoming obvious to the broader market. As we move forward, several catalysts deserve attention. Economic reports, interest rate expectations, inflation trends, regulatory decisions, and institutional participation all have the potential to influence digital asset markets. Investors should remain aware that uncertainty is normal. Nobody can predict every market movement with complete accuracy. The goal is not to eliminate uncertainty but to understand it and manage risk appropriately. Markets reward preparation more often than prediction, and maintaining a balanced perspective is often more valuable than chasing every headline. What's particularly interesting about the current environment is how many major themes are converging simultaneously. Artificial intelligence continues advancing rapidly. Blockchain technology continues developing. Financial infrastructure is evolving. Digital payments are expanding globally. Companies across multiple industries are investing heavily in innovation. Whether we're discussing XRP, SpaceX, AI, or broader technology trends, the common thread is transformation. Investors are trying to identify which technologies will play meaningful roles in shaping the future economy, and that search for opportunity continues driving interest across many sectors. For XRP holders specifically, the key takeaway is that market corrections do not automatically invalidate long-term adoption narratives. Price volatility can be uncomfortable, but adoption trends, infrastructure growth, and regulatory progress often continue regardless of short-term fluctuations. That doesn't guarantee success, and it certainly doesn't eliminate risk. However, it does remind investors to evaluate developments using a broader time horizon rather than focusing exclusively on daily price movements. The biggest stories in finance are often measured in years rather than days. As we wrap up today's update, remember that the headline may be urgent, but informed decision-making should never be rushed. Verify information, focus on confirmed developments, and avoid letting emotions dictate your strategy. The crypto market remains one of the most dynamic sectors in finance, and XRP continues sitting at the center of many important conversations surrounding payments, regulation, and institutional adoption. Whether you're optimistic, cautious, or somewhere in between, the coming months promise to be extremely interesting. Thank you for watching XRP Spotlight. Let me know your thoughts in the comments below. Do you think institutional adoption will be the biggest driver for XRP moving forward? Or do you believe regulatory clarity remains the most important factor? As always, stay informed, stay focused, and let's make a lot of money.